Hi, everybody. I'm Brittany Lewis, a reporter here at Forbes. Joining me now is Alan Owensman, Forbes senior editor and author of the Current Climate newsletter. Alan, thanks so much for joining me.
Hi, Brittany. Good to be with you.
Alan, you and I talked at the end of March, and you said things are bad at Tesla. They're about to get much worse. And I think you've really foreshadowed our current conversation today because you have some news about Tesla Cybertruck sales in the first quarter of 2025, and they really took a tumble. Talk to us about it. What do you know?
Yeah, well, there were indications a few weeks ago that they weren't going great for that particular model. And as it turns out, that was exactly correct. They just cratered in the first quarter, down over 50%. Normally, we'd want to do a year-over-year comparison, but in this case, Cybertruck was only launched in the final month of 2023, and they had a very slow ramp up. So the numbers were definitely up from Q1 of 2024 because it was a very easy comparison. But by Q2, 3, and 4 of last year, volume had really jumped up. And what we saw was that in Q1 of this year, Cybertruck sales were less than half of what they were in either Q3 or Q4 of last year. And they were also below the Q2 numbers. So what that tells us is a very new model. You typically expect to see from any automaker, it's going up like this, from launch, it's an upward trajectory. This is not directionally the way you would see a vehicle that's little more than a year on the market already being down so much. So that is a very, very negative sign.
So you said slow ramp up, and now we're already back down in Q1 of this year, below Q3 and Q4 of 2024. Is there any indication as to why you're seeing this? I mean, is it a bad product or is it something else?
Well, given the number of recalls that have been associated with this model, one could say this has been a bad product. It really got hammered, especially in March, by a very embarrassing recall in which these stainless steel body panels were literally falling off because they weren't glued on properly. That's kind of an embarrassing thing for a vehicle that Elon sold as indestructible and bulletproof and, all sorts of, extreme language to promote it. And it turns out that, when the body panels aren't staying on, that's not great, for a product generally. And then we're also, there are also other reports within the market that the company is just sitting on a lot of unsold inventory right now, at least 2,400 units that are just sitting there with nowhere to go, no buyers. So that's not a good sign for this particular model.
Alan, there really seems to be an appetite for electric vehicles, just not Cybertrucks. And I want to read a stat that you sent me yesterday. You said that Tesla's U.S. sales fell about 9% in Q1, while EV sales in the U.S. grew 11%. Can you expand on that?
Yeah, there definitely is demand for electric vehicles. The current administration is not a big fan of them, but people do tend to like them, especially if you've got access to charging, maybe at home or in your neighborhood. And what we saw was that across the industry, the segment was up very robustly, 11% gain overall. That was actually a little bit, I think, in line with or above the overall industry rate for new vehicles. Part of that was there was a rush to buy in Q1 because people don't know what's going to happen because of prices going forward, and also whether or not federal tax credits will stay available. The Trump administration has said they're going to get rid of the $7,500 federal tax credit. However, it is actually still available at this time. So for anyone who was sort of thinking, I'd like to have an electric vehicle, it seems that in most cases they went ahead and said, let's get it now. And so we did see a very robust market. One of the real standouts actually was General Motors, which more than doubled its volume in Q1. It has this new electric Equinox, a small crossover SUV. It's pretty affordable. Starts in the high 30,000s. You can get a well-contented one for about $40,000. That's a pretty decent price. And then if you're able to bake in a $7,500 tax credit on it, that's a good deal. Honda, which didn't really have anything a year ago, suddenly had a lot of EVs to sell in Q1. So there was a lot of activity in the industry, and there are a lot of models out there. Tesla clearly there is some indication that consumers are moving away from the brand, and it's being reflected with their dollars and what they're buying. We did see about a 9% drop over the quarter for Tesla across the board. Cybertruck obviously took a big hit, but Cybertruck's not a huge volume model. Their real volume comes from the Model Y electric crossover and the Model 3, and those were both down as well. So that really went against the grain, where you did see general enthusiasm from consumers for electric vehicles broadly, just not for Tesla.
You and I have talked about this Venn diagram before, where Elon Musk's politics and traditional EV customers, there is not a lot of overlap there. So how much of Tesla's branding problem do you think contributed to this Cybertruck dip?
It's clearly an issue, and I think Cybertruck, it's been a controversial product since it was unveiled. Most people who get into an electric vehicle do so because they're thinking, I don't want to buy gasoline. I'm thinking about my environmental impact. It's hard to make an argument with Cybertruck in particular. It's a very large, heavy vehicle. It weighs 7,000 pounds. It's very expensive. It takes, it's got a big battery in it, so it's very resource intensive. And the design, with this very hard-edged design that Tesla decided to go with, it's kind of aggressive in a way that doesn't necessarily say I care about the environment. It's really more kind of a, maybe it reflects someone's personality. That doesn't seem to have broad appeal. There is a segment that of buyers that do seem to like it, but it doesn't really appeal to a broad buyer base. And where you are seeing more volume does tend to be on midsize and smaller and somewhat more affordable EVs, whether it's the Kia and Hyundai models, as I mentioned earlier, with General Motors with its new Equinox, which really seems to be resonating well, both in terms of pricing, design, size, all of those things. That really better aligns with where most EV buyers want to be. It was a very risky move on Tesla's part to bring out a vehicle like Cybertruck, and as reported earlier, as one market analyst pointed out, it was a big swing and a big miss.
It doesn't really seem from your reporting that the risk is paying off. And if all EV sales were down in the US, I think it would be easy for Tesla to shrug this off and say, hey, this is the trend and we're following the trend here. But that is not the case. Tesla has a unique problem here. Has Elon Musk weighed in on this at all?
No, not that I'm aware of. There's no real effort to dial back, his public behavior. He was, I would say, the last week or so, he's been a little bit lower key, less out in front. But there's really been no major shift. And this isn't limited to the United States. What we saw, Tesla's quarterly numbers globally were bad, where it was down over 5% year over year worldwide. Europe is particularly a difficult market for the company right now, and we just have reports out today on Forbes about protests and attacks on Tesla vehicles in the UK, yet another market. We've seen Germany going really south on Tesla, France, many of these markets that just want nothing to do with the brand, and that could well be permanent damage. So in the case of Cybertruck, that's only a U.S. vehicle. It's too large to be sold in the European market. It doesn't comply with pedestrian safety rules in the EU. It's not sold in China. It's not sold in Japan. There are no export markets currently for Cybertruck. So what they sell in the U.S. is that's the only market for it. Models like the Model 3 and the Model Y have had good global appeal up to this point, but we're seeing big markets really sour on Tesla, and it's all driven by Elon entirely at this point, because they don't appreciate maybe his politics and his public views. This is a real problem for the brand.
When you see a dip in sales like this, and we're Forbes, we've covered businesses time and time again, there would be serious talks about a shakeup in leadership. You and I have talked about how Elon Musk is an absentee CEO when it comes to Tesla. There was no indication that he was going to be ousted because there's a lot of buffer zone between him and the next in line for leadership. Are these sales going to change those conversations at all?
Only the board knows that. I mean, I would love to be a fly on the wall and hear the conversations going on there. There have been no public statements from the company, no indication of any change, of course, whatsoever. In a different world, you might see Elon on his own announce that he was stepping aside, or the board taking action. There's no indication here that's in the cards, and we'll see how this plays out, but it's definitely a big risk.
Aside from this Q1 bad news for Cybertrucks, what else is on your radar when it comes to Tesla? Is there any other bad news, any perhaps silver lining? What's on your radar?
Well, we saw today also that in China, Tesla was down in China in Q1, but they're taking a further step where they're now halting exports of the Model S and the Model X SUV. Those are built in California. They're the top-end premium models from Tesla. Shipments of those to China have been curtailed, and that's entirely because of the tariff situation, where their price has essentially doubled now in the Chinese market. And understandably, there's not going to be a lot of demand for a product that suddenly costs twice as much, because they're very expensive vehicles in that market. Watching how things unfold in China remains sort of top of mind for me, for Tesla, and really for all automakers, but especially Tesla. The Chinese have a massive price advantage that's only going to increase now because of the tariff situation, and the ability for companies like Tesla to compete in that market with domestic Chinese manufacturers, it's getting ever more challenging, and the tariffs have only made that more difficult. Back here in the domestic market in the U.S., trying to understand and see the implications of the tariffs. There's an expectation that every vehicle manufacturer is going to have to raise prices by thousands of dollars. In some cases, General Motors, Ford, Stellantis, they have imported vehicles that they're building in Mexico, Canada, or other markets that they're bringing in. Tesla, to its credit, has no imported vehicles whatsoever, but it does use steel, aluminum, Japanese auto parts, electronics, all sorts of materials that come from abroad. So it's going to take a hit from the tariffs as well. So seeing in the coming months in Q2 what the full impact of the Trump tariffs remains both confusing, but it's probably going to be very negative across the board for Tesla, but for the entire industry. I think also to watch and see, both in the automotive space and in manufacturing generally. I was speaking with a board member from a company that will remain anonymous here, but he was mentioning after a board meeting this week, there's going to be a major chilling effect on investment in new plants and equipment because of the tariffs and because of the unknown unpredictability of U.S. trade policy under the Trump administration, that big projects, multi-billion projects, are not going to move forward because manufacturers don't know what the rules are. They don't know what the circumstances are going to be for bets that they're making, like multi-year bets. So a lot of folks are going to just sit tight. They're going to hold off on major investments, and that's going to have a chilling effect on manufacturing, which is ironic because the claimed reason for the trade tariffs is to build up domestic manufacturing. But if you actually talk to domestic manufacturers, they're not willing to commit resources right now because it's an unknowable future. They when people don't know what the policy will be a month from now, 2 months from now, let alone a year from now, they're just going to sit tight and say, we're going to see how this shakes out. We're not going to move forward right now.
And Elon Musk was one of the Trump supporters who posted out against the tariffs. And I am curious, are the auto tariffs going to hit Tesla harder than the industry at large, or is the blow going to be a little bit softer? I mean, what does that look like?
It's a little bit softer for them, again, because they are more, everything that they sell in the United States, they produce in the United States. So that in terms of the finished product, again, it's really more for them the inputs, some of the raw, the materials, raw materials, parts, electronics that they need, metals, those come from all over the place. And so they're going to take a hit there. I'm waiting to also understand, they had a very interesting project that they had announced with CATL. It's a Chinese battery maker. It's the world's largest battery maker at this point. It's a giant. They had a big plan to work with CATL at the Tesla Gigafactory in Nevada to bring in what's called LFP batteries. These are lithium iron phosphate batteries. They're very popular in the Chinese market. They have some benefits. They're very low cost. They don't burn. So if there's an accident, you don't get fires from LFP batteries the way you do with a lithium ion battery. That project, I don't know how that possibly moves forward right now. Because partnering with a Chinese battery supplier in the United States, that's just not going to fly under current Trump tariff rules.
And as that trade war with China is escalating really by the day, I know we spoke in March. Things are bad at Tesla. They're about to get much worse. Where are we, would you say, in this much worse area? Is Tesla going to get to the point where there's no return, or do you think that this is more of a blip in the road for the company?
I don't think it's a blip, and I wouldn't say it's the point of no return. It's somewhere in between that. I think there had been expectations that this year, beginning in the second half, Tesla could see a rebound because of plans to bring out lower price derivatives of their existing models. So maybe a cheaper Model 3, a cheaper Model Y. Well, that's impossible to do right now because all of the costs, their costs, are going up. The battery project with CATL, for example, would have perhaps allowed Tesla to have a cheaper, lower cost battery pack that might be thousands of dollars less. That would allow them to cut the price of their top selling models. Well, if that project's not happening, I don't know how they shave off $5,000 or $10,000 off the purchase price, especially if steel costs more, if aluminum costs more, if Japanese auto parts cost more, if Korean auto parts cost more. So it's bad. It's going to stay bad for a while. Previously, many of the issues were self-inflicted by the company because of perhaps poor decisions by Elon and the failure of the board to be more forceful in setting guidelines governing his behavior. Now we have, with the tariffs really beginning to bite, that adds a different layer of pain that will be felt across the industry, but that kind of complicates the problems that Tesla was already having. So if you look at Tesla versus the other automakers, on one level, they're less hurt by the tariffs than others. However, they have this growing brand problem that the others don't have. So to say that Tesla is in a good position relative to the rest of the auto industry, I think is not a correct belief in this case. I think they have different problems that other automakers don't have. But yeah, it's not going to be a good year for the company. And if you were expecting a rebound in the second half, right now, my sense is you're going to be very disappointed.
It's really interesting to see the evolution of Elon Musk, and you've been covering this now for years, where he was seen as this real genius in the tech space. And then in the span of months, he's really been seen as President Trump's right-hand man, #1 MAGA supporter here. Do you think that this branding problem for Tesla is permanent, or do you think it's more temporary?
Well, I mean, if something dramatic were to happen, if he were to announce he's stepping aside and he will have no active management role, and the company suddenly brought in a fresh face with a different style, you could probably fix a lot of the damage and maybe put the company on a new trajectory. Right now, I don't see how things reverse in the near term or even the midterm, unless there is a major change at the top, honestly. It's just a simple rule of business, like keep your personal politics and a lot of your personal views out of it. You want to sell to everybody. Try not to alienate buyer groups, and especially don't alienate, your core buyer base, which in this case turns out to be people who tend to identify as Democrat or more liberal, who actually are the biggest EV buyers, especially in California and the West Coast states and in the East Coast. Maybe, don't anger or turn off those customers with your political and views on social issues, for example. And we see as a general rule that very few companies, very few CEOs actually actively aggravate their core buyer base. But unfortunately, that's exactly what seems to have happened at Tesla. If that continues, then the future looks bleak, unfortunately. And a lot of goodwill that the company built up just evaporates.
I mean, I do think that's the biggest piece of business advice. If you're the CEO, don't annoy your number one customers. Alan Owensman, we will leave it there. There is so much news coming out from Elon Musk, Tesla, everything in between. So I'm excited to keep talking with you about it. Thanks for joining me.
Thanks, Brittany. Great to be with you.